Good morning and welcome to the Killik and Co market update. Markets have performed well this week following the release of the latest US inflation data, which came in below expectations. The CPI data was published on Tuesday this week, and after that, the assumed probability of an interest rate cut in the US in September rose to 99%. Investors have been keeping a close eye on inflation in the US to see if tariffs start pushing up prices. The CPI figure was 2.7%, while the expectation had been 2.8%. The inflation rate for food specifically was slightly higher at 2.9%, whereas the rate for energy was minus 1.6% thanks to the lower oil prices we've had recently. The so-called core rate, which strips out both food and energy, as these items are thought to be relatively volatile, was 3.1%. Although the CPI data was well received, the PPI data, or the Producer Price Index, was published on Thursday, and that came in above expectations. CPI measures the prices that consumers are paying, whereas PPI measures the prices that producers are paying for the products that they need to produce their own goods and services. Here's a comparison of the two over the last decade: CPI in pink and PPI in green. If you look at that black dashed box on the right there, you can see that CPI has been fairly constant of late, whereas PPI has jumped up. The most recent figure was 3.3%, above the expectation of 2.5%. Machinery costs were a big contributor to the rise, and this could well be due to tariffs. After the PPI data was published, the expectation of a rate cut in September has dropped to 92%. We've had a couple of bits of news for the US tech sector this week. Firstly, it was announced that US chip companies Nvidia and AMD will now have to pay 15% of their Chinese revenues to the US government. Here's a breakdown of where the two companies are earning revenue at the moment. The Chinese revenue is shown in pink. Nvidia on the left earned 12.8% of its revenue in China in 2024, and AMD earned 23.6%. The policy was a bit unexpected, but the share prices for both companies have since risen. Here they are in percentage terms, both up over 20% during the last 12 months. Investors are likely relieved that the two companies are allowed to continue selling into China. The other bit of unexpected tech news this week was that AI startup Perplexity has bid $34.5 billion for Google Chrome, owned by Alphabet. It's worth noting that Perplexity was last valued at just $18 billion. Here's a breakdown of where Alphabet's revenue comes from. Chrome would fit into the largest section, search, which accounts for well over half of Alphabet's revenue. Google has been accused by the US Justice Department of an unlawful monopoly in terms of online search, but it is currently appealing this, and it has certainly not put Google Chrome up for sale. And lastly, we've been looking at the level of concentration in the S&P 500 index, which continues to rise. By concentration, we mean the proportion of the index that's being dominated by a small number of companies. The standard S&P 500 index is weighted by market capitalization, so larger companies are given a larger weighting in the index. As the name suggests, there are 500 constituents in the index. At the moment, 10 of them make up over 38% of the index, and the other 490 make up the other 62%. It's interesting to compare the standard S&P 500 index to the S&P 500 equal weighted index, in which all 500 companies are given an equal weighting. On here, we compare the two over the last 30 years. The standard S&P in the pink and the equal weighted in the green. The equal weighted is ahead over this particular time period. Let's zoom in and have a look at the dot-com bubble, dot-com crash period in more detail, as this was also a time of high concentration. The S&P 500 moved ahead in the bubble, but then it fell a lot more in the crash as it had big positions in some tech stocks. It is worth noting that tech companies today are in a very different position to the ones back in the bubble, the main difference being that the big ones today are extremely profitable. If we zoom in on the most recent 10 years, we can see the S&P 500 moving ahead as the companies in the top 10 have outperformed. The question is, will the index continue to get more concentrated, or will the other 490 constituents start to catch up? Moving on to have a look at next week, we are expecting results out from BHP, TJX and Intuit. That's it from us. Have a great weekend, and we'll see you next Friday.